It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by PortfolioCrafter.com.
Welcome to this edition of the TradingTips.com video newsletter. This week we're looking at gold in 2012. Several analysts are predicting a banner year for the precious metal, but why? And if you agree, how can you play gold? We'll look into all of this and more in this episode. Analysts from Goldman Sachs are saying gold is going to take off in 2012. Goldman is advising clients to be overweight in commodities in general, but especially gold. They're setting a price target of $1,940 per ounce, more than 18% above the current price of $1,634 per ounce. Morgan Stanley goes even further, projecting gold at $2,200 per ounce in 2012, which would be a 35% increase from where gold is now. Why are these big money institutions so bullish on gold? Well, there are several catalysts for a bull market in gold. First, there's the euro debt crisis. When people lose faith in the security of paper money, they run to gold, and this is what Europeans are doing now and will continue to do. Furthermore, European central banks may begin buying up gold to solidify their currency. Second, we have the Federal Reserve's commitment to continued low interest rates. Low interest rates fuel money creation, and with money creation comes inflation. This makes dollars less valuable, and thus investors like to find safe havens against inflation like gold. Third, central banks in emerging markets are buying gold, as they are no longer content to back their currencies with dollars and euros. Fourth, we have general global instability. A war between Israel and/or the US and Iran would drive the price of gold through the roof. And with the US presidential election coming later this year, that may become more likely. But why are people fleeing to gold? Have you noticed the "We Buy Gold" signs around your town? You rarely see anyone advertising they are selling gold. The smart money has been betting on gold for years, and it has been right all along. Gold has always been considered as money. In fact, from the dawn of civilization through 1971, gold was money the world over. And with the debt crises in Europe and the US, we may see it return to its monetary status sometime in our lifetimes. Gold, of course, is uncontrollable by governments, which is why they've abandoned it as money and why it is so attractive to private investors. Governments have screwed up their own fiat currencies, but they can't screw up gold. And finally, gold has numerous industrial applications, more now than any other time in history. Industrial usage alone makes gold precious and valuable. There are several ways to play gold. First, you can buy physical bullion, which is gold in the form of coins, rounds, and bars. The difference between coins and rounds is that coins are issued by governments while rounds are produced by private mints. All of these gold products are available online and may be available at your local coin shop too. Secondly, there are gold ETFs or exchange-traded funds. These funds try to mirror the price of gold, but are traded like stocks on a stock exchange. Ticker symbols for some gold ETFs include GLD, IAU, SGOLD, DGL, AGOL, and SPGH. Third, there are gold mining stocks, stocks of companies that mine and produce gold. Some of the top gold stocks are GOLD, RIC, RGLD, NEM, AUY, ABX, HMY, and AUQ. Finally, you can trade future contracts for gold, which allows you to make leverage plays on the metal. Here's a chart showing how gold has fared since the beginning of the year 2000, all the way through 2011. In this same time, the value of the Nasdaq has basically been cut in half. Gold mining stocks tend to trade in tandem with gold, but with a higher beta, meaning they tend to go up more when gold goes up and go down more when gold goes down. If you think gold is headed higher, though, gold mining stocks are a great play. But how do you identify the best gold stocks? One way is to use Portfolio Crafter. We are always on the lookout for the right time to buy gold miners, and each week we make 2 short-term picks and 1 long-term pick. These are not just gold or precious metal stocks, but picks from the entire universe of US traded stocks. We've had some big winning gold stocks in the past, though. NEM entered at $65.49 on October 18, 2010, and was sold at $70.79 on November 7 for an 8% gain. ABX was added at $42.50 on July 6, 2010, and sold at $49.87 on November 4 for a 17.3% gain. One more example, AUY was added at $10.01 on September 28, 2009 and sold at $11.87 on October 8 for a 17.7% gain. These are all real trades enjoyed by Portfolio Crafter subscribers. To recap, major institutions are bullish on gold for 2012, and there are many catalysts for a bull market in the precious metal. Gold has intrinsic historical value. It was considered money from the dawn of civilization through the year 1971 and may be considered money once again sometime soon. There are many ways to play gold, including holding the actual metal, buying ETFs, and using the Portfolio Crafter subscription service to identify the best gold mining stocks when the time is right. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This video newsletter has been brought to you by Portfolio Crafter. Manny Backus designed Portfolio Crafter to be one of the easiest trading systems available on the web today. But don't take our word for it. Visit www.portfoliocrafter.com and access the free special report. It will show you how you can place profit-rich stock trades in just 15 minutes a week. Read the free report, and you'll understand how the easy money's made in the markets. To access the free report, visit portfoliocrafter.com. Portfolio Crafter, another market-beating investment service from Wealthpire. Take control of your financial destiny. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.